Uh, Today's topic, rehabilitation in the banking sector, I think stems from the fact that the expectation is that both globally the economies would suffer a lot, and I suppose the Indian economy is already affected and it could get affected. So, how is it that the banking sector would get affected, and what can we expect? How would banks respond, and how it would affect the economy, how it would affect the lives of millions of Indians? So, what I propose to do is, I was told that there would be about an hour's time that we would have to for this program, and I try to keep my initial thoughts at maybe 15-20 minutes, and then maybe open it up for questions, and then while responding to the questions, we can get into more details. So, at the outset, what I would like to touch upon is that when we are talking of the banking sector, we need to understand how is the global economy placed. So, I think one event which all of us would recall that has happened in this century, that is post 2000, is the global financial crisis, which happened in 2008. And typically, what economists say is that the world economy moves in cycles. So, typically, there is a cycle of 8 to 10 years of very high growth, and then it is followed by a cycle when you have a tapering off. Then again, there is some distress, and then the cycle of growth restarts. So, what happened in the global financial crisis? I will not get into the details of that, but basically, it was certain huge over leverage. What we call leverage means basically too much of debt being taken, and the real sector not growing to the extent that they can accommodate that debt. That is what was happening. It started, as you may be aware, in what is called the subprime crisis in the US. That is, a large number of loans were given to borrowers who were not of very good quality with poor credit ratings in the home loan sector. But instead of showing that these were weak loans, what was done was they were packaged in a very advanced, what is called structured finance, in which they were mixed with very good quality loans, and then the entire pool of loans was packaged as having a very good rating. And thereafter, this crisis started off in 2007, and it then went into the financial sector in 2008. We had Lehman crisis, and there was a collapse of the global economy. At that point in time, every country in the developed world, especially in US, Europe, every country was affected, and every country did a whole lot of took a whole lot of measures. They pumped in liquidity. They helped in US. There were large number of steps taken to support businesses which had got affected, and so on and so forth. Europe also, there was a huge debt crisis in countries like Italy, Spain, Greece, and the European Commercial Bank and all the European countries. They worked very hard. So 2008 to, I would say, 2011-12 were very, very difficult years. And based on the global financial crisis, why I allude to it is that it has a linkage with the banking sector, because it was realized that a lot of things were done by the global banks, not so much the Indian banks, but by the global banks, which were not very good practices. When you are looking at banking is a sector which takes risk, but it does so in a manner in which they will be able to manage the risk. But those prudent practices were sort of given up, and therefore there is a global commission which is based in Basel in Switzerland. So these are called the Basel rules. So the Basel rules were tightened across the world. There was more capital requirements, and then investment banks also, which in a way could be called the harbingers of the crisis. They were told to reshape, and many things that they were doing wrong in the past, that was checked. So as a consequence of all these measures that were taken, including the support, the huge financial support that were given in terms of monetary policy easing by the respective central banks of the European countries and in the US, the world sort of came out of this within 3 or 4 years. I would not say completely came out of it. Some countries continued to get affected. But by and large, the developed countries sort of seem to have started going back on the growth path from 2012-13. And even before COVID happened, so this was a cause of worry because for 6-7 years you had very healthy growth in most of the developed economies. So as a consequence, the global growth was somewhere between 3 to 4%. So this is the global scenario from 2008, say, till 2020. Now, how about India? If you look at India, in 2008, when the global financial crisis happened, actually, if some of you are economics students or following economics, you would know that India continued on a very high growth path right from 2001. 2001 to 2012 or 2013 were years when India had an average growth rate of close to even 8%, right? So we were almost catching up with China. China started much earlier, and they have been having growth rates, and especially post 2008, over some of, I think, 2009 or 2010, we had growth rates of 9 to 10% in India. And then I think the problems here started from 2013. What were the reasons for the problems? I think part of the reasons from the problems in growth that we started having from 2013, 14, I think we had a growth of from 9 or 8%, it dropped to 5 or 6%. The reason for that in 2013-14 was that overcapacities were built in this period of high growth. A lot of project work had been done, what we call project finance, building up capacities in road, power sector, coal sector, other infrastructure sectors, steel. And the expectation was that because India is a developing country, the demand would continue to keep rising. But after some time in 2013-14, when this government, which is ruling the country now, they came in, by that time what had happened was that the growth seemed to have not only tapered off, but various other issues had arisen. As you know, that there were certain scams which had also been detected, the coal sector scam, you're aware, in the telecom sector there were issues, and all of this had to be addressed. And when you have these problems in the real economy, it could also impact the banks. So banks also had very healthy growth in business and profits in the period from 2008 to 14. But post that, it was realized that the NPAs were also building up. The reason is, if the companies face a problem, then they are unable to repay the banks, and a large number of loans had become stressed, and certain action had to be taken both by the government and the Reserve Bank of India, which I will deal with in a moment, and they were taken in the period between 2014 to 18, and the banks also, therefore, in a way cleaned up their balance sheet or took certain steps, and I will give some examples of that. So this was the position before COVID happened, which was in March 2020, and I wanted to give this backdrop just to make you understand as to how these challenges will be met by the banking sector, what could be the impact that it may have on the Indian economy, and what are the ways in which India can bounce back. So what is it that India seeks to do? India, basically, we know that we are a country where there is tremendous prospect. Our Prime Minister has given a call. Again, this was pre-COVID, and the timelines might need to get revised, but has given a call that we should become a 5 trillion economy by 2024. As of now, we are somewhere close to just under 3 trillion. The expectation was that India would grow at 8 to 9% in all the financial years starting from 2020 and going up to 2024, and which was achievable because there are a whole lot of things that India can do in the infrastructure sector, we can do in the manufacturing sector. There has been a call given for Make in India, and so on and so forth. So this is the goal that India wants to achieve, and we have not given that up. COVID may be a temporary setback, but we have not given that up. And if we wish to achieve this, we need to do it on the back of financing that we make available from the banking system. So I now take you back to what I said about the Indian banking system and the Indian economy. So what did we say? That from 2008 to 2014, there have been huge capacities built, some of which we are ourselves witnessing. If you see all the airports, many of us today, because of COVID, air travel has completely stopped. But I think all of us who would not even dream of traveling by airplanes before, say, 10 years back or 8 or 10 years back, now it is normal for us to go from one city to another by plane. We would normally take a train. And if you look at the quality of the airports, they have all improved. You look at the quality of the highways that we now have across the country, they have all improved. All this has happened because of financing. In the power sector now, we are able in most of the states to supply power almost on a 24/7 basis. This has happened because of the power plants that we set up both in the public sector and in the private sector. So as I said, while doing this, I think some of the companies which invested in these projects, they sort of overestimated their higher capacities were built, and therefore they have a problem in now repaying the debt or repaying the debt 3 years back. And as a consequence, and various other developments also took place, which you are aware, various Supreme Court judgments were given, and so on and so forth. So in 2014, the stress in the bank's NPA position and the weak accounts, these were building up. So as a consequence, I think many measures were taken, but 2 or 3 I will mention here. The Reserve Bank of India decided to step in and say that, you need to deal with these accounts on priority. So when there is a stressed account, what do the banks do? They try to give a chance to the existing promoter, because typically when an account is stressed, the cash flows which are being generated from the respective borrower is insufficient to meet the debt obligation, whether it is interest payment or whether it is repayment of the loans that they have taken. And if it is insufficient, if the cash flow is insufficient, then you need to rework what the amount of debt that is taken. So that is called restructuring. So the part of the debt which can sustain the operations is called sustainable debt. The non-sustainable part is called unsustainable. Some kind of restructuring is done, and so that the company can again start functioning effectively, and they are enough to repay the obligations that they owe to the banks. So this process, earlier what would happen is that it would happen typically with the existing promoter, or he would try to get an investor. And one of the things that he would need to do, apart from the banks rephasing their loan, was to bring in additional equity on his own. Sometimes they were able to do it, sometimes they were not able to do it. But when the banks did the restructuring, in the past, the norm was that if you do the restructuring, you need not classify it as a non-performing asset for some time. And this was sort of leading to a position when the banks were not able to assess, or the banks were not able to reflect in their books the true position of the NPAs. So Reserve Bank, I think first it came in 2015 that they did an asset quality review of the banks, of the top 100 or 150 accounts, and then they said that, okay, you have done restructuring, but I think, these accounts continue to be weak and you need to recognize them as NPAs. So as a consequence of this, the non-performing asset portfolio, which I'm sure all of you would have read, of the banks went up significantly. And I think it peaked in the years 2016-17 and 17-18. But from that time onwards, 17-18 onwards, the banks, as a consequence of this, did a few things. One is they made adequate provisions for these accounts. Some of them raised capital, like State Bank of India did. Some of them were capitalized by the government. And the idea was that the balance sheet would be cleaned up and fresh loans that are given would be done with much better risk management techniques. And risk management techniques also improve because now technology enables us to do many other things. We can get early warning signals about the way a company functions much faster. We are able to get things together, understand, engage with the customer, and so on and so forth, and ensure that whatever fresh lending we do and whatever we do to manage the existing stress in our portfolio, we are able to do it much more efficiently. So that is what the banks did, and various other steps were also taken by the government. Some public sector banks have got merged. Now, as against 20 public sector banks, we are down to 12. The associates of State Bank of India, we had 5 associates, they have now merged into, all of them have merged into SBI. And even in the private sector, there have been some stories which are not very good, like Yes Bank. But some of the other private sector banks which were into corporate lending also suffered for a while, like, at least I won't name them, ICICI Bank and Axis Bank, but now they are also on much firmer ground. And I think 1920 was a year, I think, where a lot of course correction was made. The credit growth consequently had slowed down, but we were looking at an uptick from the second half of 1920. That is from October 19 to March 20. I think the credit growth for our bank and most other banks were quite healthy. And we were very hopeful that 2021 onwards, we would be completely aligned to the vision that the nation has and the government and the Prime Minister has on growing India and growing in a very healthy manner to a 5 trillion economy. We continue to be a country which is poor because our per capita GDP, as you know, is just around $2,000. Even if you take on purchasing power parity basis, it is somewhere around $9,000. Whereas the richest nations in the world have a per capita GDP of $50,000. So we have a lot of catching up. Even vis-a-vis China, China is now, in terms of per capita income, 4 to 5 times richer than India. And I'm sure that we have the capacity to do that. And banks will play a very, very vital role in this process. And the banks had become equipped to do that and is fully poised to do that also in a very effective manner. However, now COVID has happened. So how does COVID change things? COVID changes things in just one or two ways. One is that in this portfolio that the banks have, which I was explaining to you, as I said, the stress had significantly eased across most of the banks. And the portfolio, which was very healthy and strong, was at an all-time high level, I would say, by the time we ended March 20. You would have seen the results of some of the banks which have been disclosed, including our bank, and we have disclosed a very, very healthy for quarter 4, that is for January to March 2020, and we were well poised to take this on. But now our priorities to some extent have changed because many of the companies are now affected. Because what do we see currently? We see that the world economy, as against the growth of 3%, which they had on an average for the last 4-5 years, is expected to have a negative growth of 3% in this year. As far as India is concerned, there are many estimates. All that we know now is that quarter 1, that is April to June, will certainly be negative growth, and so also July to September. Most of us are very hopeful that since the unlockdown, as we say, has happened, from October to December, quarter of the year, and January to March of next year, we will start getting into positive territory. But financial year 2021 will probably be a year in which we will see negative GDP growth in India. But 21-22 again, we hope to bounce back. The faster that we are able to do this, the better it is for us. But everything is not in our hands. As you know, it is a very, very fine balancing act that is being played at this moment, both by the government and by the people. The government would like things to open up, but I think all of us realize that the most precious thing that we have is a human life. So we can't afford to lose a single person, and at the same time, so we have to fight the virus, and at the same time, we cannot afford to be completely locked down for time immemorial. So what is currently happening is a phased opening of the lockdown. How it will go, we don't know. There are various estimates. Some are saying that by July, August, we should see some kind of flattening of the curve. So states like Maharashtra and Gujarat, which are very badly affected, and where there is much more industrial activity, will also open up, and we will get back into business mode. In this period, what we have done is to closely, very, very closely interact with all our customers, with our borrowers. We are trying to help them in all possible manner that we can. We have given them emergency lines. Reserve Bank of India has announced various schemes by which they can defer their payments, repayments. So term loan deferments have been announced. We do some reassessment of working capital, and so on and so forth. And we are doing all these things to make sure that we are with our customers so that they can once again, as soon as the economy opens up, they can once again get back into business. So this is what I wanted to state. To summarize, I would just state that where is the banking sector poised in India? It is very, very healthily poised at the start of this financial year. COVID is certainly a setback, but my sense is that we would be able to overcome this by cooperating very closely with our borrower community, trying to understand their needs, and that's the way that we will go forward. As far as the prospects for India is concerned, this again is a setback which will impact us, but it can only keep us down for some time. But the trend that we see, that the prospects that we see for India in the next 5 or 10 years, we have a young population, we have demography on our side, we are focusing on the right things in terms of manufacturing, and if not in 2024, I'm quite sure that we will be able to reach that 5 trillion goal, and the banking sector will be able to support that. I think I've answered the question while speaking. As I said, the financial health of the banking sector was already back in track by the end of March 20. So if you see our SBI results, our net non-performing assets had gone up to 6%. Because of the actions that we have taken, we have brought it down to almost 2%. And almost 84% of the bad loans that we have now have a provision coverage are provided for, which is called the provision coverage ratio. So banks are very healthily, but as I explained, that there could be an impact because of COVID, and how much additional capital or additional resources that the banks will need for that, we will have to see. But I'm sure that it is something that the banks will be able to deal with quite comfortably. That again I have answered, but I will reiterate that at the moment there is a freeze on fresh NPAs. That is any account which was already stressed as of the 1st of March, that we have to recognize, and we have done that. But because what has happened is, how do companies repay? They repay from the cash flows that they generate out of their operation. Some of them have additional cash flows which they have generated in the past. But those which repay out of the cash flows that they have generated in this period, there was no activity. No one was even able to go out of the house from 25th March to say 25th of May for 2 months. So what has happened is the cash flows completely dried up for these companies. So they have been given extended time up to August 31st, by which time they are restarting their activities. And we do not estimate a very, very large spike in the number of stressed accounts only because of COVID. Because once they have been given this time, up to extra time up to 31st August, they, I think, would be able to generate cash once again and be able to repay. So as of now, our assessment is that there may not be a very great spike in the NPAs, but we will keep watching the economy very closely. It will all depend on how soon or how quickly the economic activity revives. So Basel norms have not been relaxed except for the fact that the central banks, which are typically the regulators of the banking system, they have supported all kinds of things. So I can enumerate what Reserve Bank of India has done in our country. As I said, first they have given deferment in repayment of loans for 6 months. They have also made liquidity lines available for us, what they have called a targeted long-term repo operation. It's a little complex in explaining what it actually is, but it is basically funds which the banks can pick up from the Reserve Bank and lend to the non-banking financial sector or other corporates. The government also has taken a huge number of steps. The finance minister has been announcing various steps almost at regular intervals starting from March onwards. One of the most major ones is that for our MSME sector, all borrowers who had standard loans with the banks, 3 lakh crores have been allotted. That is, 3 lakh crore is about 20% of the outstanding of the good loans in the MSME sector. So what it means is that 15 lakh crore is the outstanding of the MSME sector. As you know, there are almost 8 crore medium and small enterprises in the country, and they contribute almost 45% of India's GDP. And they are smaller companies who get affected much more. So the government has said that you give additional 20% of their outstanding, which was 15 lakh crore, and this entire fund is guaranteed by the government. So all the banks, we have started rolling this out. By the end of June, in SBI, we would have to do some 30,000 or 35,000 crore out of this 3 lakh crore, which is being done by the banking system, and we expect this to be disbursed. So there are a whole lot of things which are being rolled out, and the Basel norm specifically is basically to the risk management norms for the bank. So they have not been done away with, but they have been kept under, in a way, it's been kept on a wait and watch mode for 6 months. That's the best way that I can see this. So there has been a huge campaign which is being done both by the banks and the government to make them aware of the scheme. For rural people, I think there was a Pradhan Mantri Garib Kalyan Yojana which was announced, one of the first announcements done by the government, and almost 8 crore people, 8 crore of SBI customers and total of 55 crore people were credited with the amounts that were allotted by the government, and which has already happened in the month of April. And there are various other schemes which have been announced for the rural sector. Thankfully, this year the monsoons have been good, so we are hoping that the rural sector is one of the sectors which is able to revive faster than the others. Yeah, so just to explain the Aatmnirbhar package, because there has been some misunderstanding that it means that India will do everything on its own from now on, and we will go back to a situation where we will not have any imports or exports. That is not the point. I think what the Prime Minister wanted to do, and what will be the focus of the government from now on, will be that we make ourselves also self-sufficient. That is, certain things we need to engage with the world. There will be no change in that, because if we want our economy to prosper, we need to export. If we
सकूँ
manufacture,
भूल देना
then we only will be able to export. So there will be a linkage. But what we can do in this period is that identify pockets where India can also get into the global supply chain. So if you look at what China had done, in the period of growth that they had from 1979 onwards. So half the things that we now see in the world are manufactured by China. So what does it mean? So they got into, so if it is a doll also, it is manufactured in China. If it is a sophisticated Apple phone, that is also manufactured in China. So China did two things. One is they were able to set up their own self-reliant, their own manufacturing capabilities in which they had their own products. Like a Huawei or what is that, Lenovo. These are Chinese brands which they were able to build. And at the same time, they opened up their manufacturing to a whole lot of foreign companies. So Apple manufactured almost half their products. Everything is designed in the US, designed in their headquarters in Silicon Valley, but it is manufactured in China. So by Aatmnirbhar, that is what is meant. That India will be there in both the parts. One is that we should be able to continue to be a hub where we can serve the requirements of the global supply chain, one. And second is India would be able to also have its own products and services which can be globally competitive. And it cannot be done in a day, but the start has to be made. And what I think the government feels that this is the right time. Because of COVID, now people across the world are looking at alternatives to China. So this is the time when we should grab that opportunity and bring it forward. That is the way in which we see Aatmnirbhar, and we are whatever we can do from the banking sector, we are also poised, or we will also try to achieve that.